The difference between capital growth and cash flow strategies in property investment. Hi, I am Jaco Grobbelaar, the founder and managing director of Prosperity Enterprises. There's a big difference between going with a capital growth strategy when building a property portfolio or going with a cash flow strategy. And it is imperative for you to understand the difference between a capital growth strategy and your cash flow strategy. So, what is a capital growth strategy? The objective of a capital growth strategy is to acquire properties that appreciate in value. The key features of a capital growth property would be that it focuses on appreciation. That means that the most important thing of that investment is how much that investment is going to grow by from a capital appreciation or a capital growth perspective. Location is everything when it comes to a capital growth strategy. You need to invest in the right town or city, a city or town that has a history of showing capital appreciation, and you need to invest in the right neighborhood where there is great capital appreciation. Another key feature of a capital growth strategy is also that it is usually a long-term investment strategy where you hold the property for quite some time to benefit from the capital appreciation of that property. And then lastly, it would be a property where you are okay with lower rental yields, where you maybe don't have the best cash flow or the best rental yields on the property. But because of the capital appreciation that that property gives you, it's sufficient for you to keep that property in your investment portfolio. Let's talk about cash flow. So a cash flow property investment strategy is a completely different strategy. There you don't focus necessarily on the capital appreciation of the property, but your cash flow, your rental yield, your net rental yield is everything. So you want to generate positive cash flow on a monthly basis. The key features of such a property investment is that you focus on rental income. You want to acquire properties where you can generate maximum rental income. The location would also be different because you would focus on areas where there's high rental demand and where good prices can be charged on rent. It's a short to medium term strategy where you can generate returns much quicker. And lastly, high rental yields is everything. You want to generate a high rental yield on such a property. Now, cash flow properties would usually be multi-lets, student accommodation, short-term rentals, or investments in low-cost housing or blocks of flats where the rental yields are higher and where you can generate positive cash flow from day one. Let's talk about the advantages and disadvantages of capital growth strategies versus cash flow strategies. In a capital growth strategy, there's significant profit potential or capital gain potential. It's also an investment that can generate wealth creation for you. And lastly, it has exceptional tax advantages because with a capital appreciation property, you can often generate wealth without paying any taxes. The disadvantages of a capital growth strategy is that there is market risk and the property might not appreciate in value as much as you are hoping it would. You are basically dependent on the capital appreciation of that property. And if it doesn't grow, there's very little that you can do. It can also create cash flow challenges where you have a big shortfall on a monthly basis that you need to subsidize, and that shortfall can cripple you to survive financially. And then lastly, you need to keep this property for a long time horizon because capital appreciation usually takes some time. What are the benefits or the advantages of a cash flow strategy? With a cash flow strategy, you are creating positive cash flow from day one. So there is regular income. Secondly, it's a lower risk investment because of the fact that you do not need to subsidize a shortfall on a monthly basis and you generate positive cash flow that makes the property a much safer investment. And additionally comes financial flexibility. With the positive cash flow that you generate, you establish financial stability for yourself. The disadvantages of a cash flow strategy is that sometimes these properties do not grow or appreciate in value as quickly as capital appreciation properties. Secondly, property management is usually much more hands-on, so you would be much more involved with the management of your property portfolio. And lastly, you can still be dependent on the market where the rental demand is maybe not as high as you expected. So how do you choose between a capital growth strategy and a cash flow strategy? The first question that I usually ask is, how much money do you have? And secondly, how much time do you have? If you have a lot of money and little time, it's probably better for you to go with a capital growth strategy where you can invest in properties that can generate passive income for you, even though there is a shortfall, but that will have good capital appreciation or capital growth over time. If, however, you do not have a lot of money, but you have got more time, a cash flow strategy is perfect for you because you can generate positive cash flow from day one, which means that it's not going to cost you a lot of money out of your pocket to acquire the investment properties. And secondly, you have got some time to be involved with the property management of that property portfolio. Remember to book your one-on-one consultation with us or to book for a seminar live near you. If you like this content and would like to receive more of it, remember to like, share, and subscribe. Thank you.